Good evening, everyone. Welcome to Hit the Bid here on June 22nd. Tonight, we're going to run through our Week 25 Market Watch, where we check out last week's action and see how it's going to help us navigate these markets in the week ahead. Also, going to be on the lookout for potential opportunities and big notable events to keep our eye on as we begin the new trading week. So, let's dive right in here, starting off with our cattle market. We did see cattle prices continue to pull back last week off of this recent all-time high. Here on this August live contract, we did see this all-time high printed at 220.05 on the 9th of June. In the 2 weeks since then, we have seen prices just continue to steadily sell off. However, this sell-off has just been a very structured pullback in this big picture uptrend, showing very healthy market behavior. Last week, we did see a steady sell-off, but ultimately only losing about $2.50 off this prior week's close at 212.25. So not a huge amount of downside, but did sell off nonetheless. All week long, we did see good rally attempts sprinkled in. Monday morning, we did see that initial break back towards 216, showing a good rally attempt. The following day, we did fail to get any bids above 216, which has been a key level for us over the last couple of weeks. We did see that pullback continue from there, back down towards 210. This balance day on Wednesday showed us that we could have a potential rally attempt on Friday. That breakout did happen above that opening range right around 212 Friday morning, driving up near 214, but the bulls were just unable to sustain that rally and eventually giving back all their gains and closing down here at a new weekly low, but still here in a good supportive territory. If we take a look on our lower time frame here, we can just see a nice orderly pullback here with lower lows and lower highs showing this market. Just a nice steady pullback. These rally attempts showing these pockets of buyers are alive and well at that 20-day moving average, as well as this value area we kept our eye on right around 211. Good rally attempt there Friday morning before losing all that ground, but still closing here in a supportive area. As we head into the new week, we can see this is a very structured pullback, and continued breaks below 209.37 could see this pullback continue. The next step down is going to be this little pocket of buyers here right around 208. Dating back to the end of May. This is a spot that we did see lots of activity, and we could see buyers stepping back in down here. This also coincides with our 50-day moving average, so this should be a very good supportive spot. We do see with that close on Friday, we could see continued selling here to start the week, but we do want to look at this sell-off as a buying opportunity. Just need to wait for price to balance out, and the bulls show good support before beginning this next leg higher. Rally attempts are expected to be seen in the week ahead, but we just want to wait and see price balance out and tighten up and define a good risk level before we step in front of this thing. But we should see this live cattle market begin to balance out and turn around back towards that all-time high territory. So good healthy action here should see the bulls try and reverse this market back towards those all-time highs. Let's jump over to the feeders now. Similar action over there with a steady sell-off all week long. Good back and forth action with those rally attempts there on Monday and Friday morning as well. We did see a little bit stronger market here with Friday closing inside that Wednesday's range, failing to close the week on the low like the Fats did. Nonetheless, though, good structured pullback here in this big picture uptrend as well. We do expect to see support step in and turn this market around. At the moment, any offers below 301, we could see flush down towards our 50-day average here right around 299. We do have a pocket of buyers waiting for us, good support dating back to May here between this 296 and 299 area, so we could see even a probe of that 50-day moving average like we saw back here on our last few pullbacks to that 50. We do expect to see prices balancing out here in the week ahead and looking for a rally attempt to come, but we just want to see price consolidate and show a nice tight risk area before we get on board here and commit to this next leg higher. But good healthy market behavior across the board in this feeder and fat cattle market. We should see this dip being a buying opportunity and this market start heading back towards those all-time highs. Jump over to the corn futures now. Last week we did see this July contract steadily sell off from that Sunday night open. Good steady bleed all week long. Price is driving lower here on this July contract, while we did see a little bit of a rally here on December. That Sunday Monday action, Sunday night breakdown, pushing down here towards 434, but a rally attempt back up into the 440s. We did get a rejection with that probe of that 50-day moving average, and as you can see here, dating back to April, we have seen steady lower highs getting put in here following this downtrend line, and equal lows at 434. We should continue to see price consolidate and tighten up, putting pressure on 434. The downtrend is still in control here on this July contract and in the corn market in general. This December market is a little bit more range bound and has been a little more sticky here in between 430 and 450, but we do see pressure continuing to build, and we should see breakdowns below 434 carry over into this December contract. As we head into the end of the month here, we will be rolling over from July into December, so any new positions should be opened and looked at in this December corn market, and we should see continued downside here as corn looks to get cheaper. Very little volatility to be expected. Just look for a slow, choppy market, and this corn market to just have a slow, steady grind lower. Now over to the crude oil market. More news this weekend coming out of Iran with the United States getting involved in the action. We did see a little bit of a gap higher here in the Sunday night open, price opening up there at 78, but failed to continue higher. This is just another example of fundamental news driving the market higher, but ultimately being a good selling opportunity, as this could be a potential climax type top, putting in a near-term high. This market is up here at overbought territory following this recent breakout and all of the news and volatility. Last week we did see price just trading in some wide sloppy ranges. As this market did digest the recent news and this recent rally up into the high 70s. Nice wide ranges. Here we can see price cutting back and forth in between our pivot points, which will remain the same as we head into the new week. We did get this Sunday night gap higher up here right around 78, but so far we have sold off above 74.40. The bias is still to the upside, but if we do get below that and we start to chop around this in between our pivots once again, would expect to see a pullback come from this area as prices are up in overextended territory, and all of this news could cause a bit of a climax top and see prices continue to pull back towards, or begin to pull back towards these 60s and back down towards these major moving averages, with the first one being this 20-day moving average here, just coming up here just above 68 bucks. At the moment, though, we will have to wait and see how the world responds to the weekend events. Any more upside should be fueled by escalation in the situation over there in Iran, but beyond that, we should see price continue to chop up and digest the volatility and have a slow drift lower back towards these moving averages. If you're not in a position here, there's really not. This is really not the environment to be opening any new positions, as we are just at the mercy of the next news event and this volatility. So just want to be cautious in this crude market. But that being said, barring any more escalations in the situation, we should see crude oil prices continue to begin to drift lower. Heading over to the equity space now. Our S&P 500 here so far tonight, gapping lower off of the weekend news, but having a nice rally here in the Sunday night session. Last week we did see price roll over into the September contract, as well as just have a choppy, quiet Fed week. Not a whole lot of news or new information coming out of the FOMC meeting last week. Just a nice steady drift here as this market remains healthy and strong. We are seeing good support here at the 20-day moving average, which we are seeing here in the Sunday night open as well. We should expect to see these equity markets continue to drift higher as this market environment remains strong and healthy. Good low volatility grind higher to be expected in a healthy market. No big swings here at the moment regarding any of the news over the weekend. As we head into the week ahead, there are some economic data sprinkled in all week long, but the big item to watch this week is Jerome Powell's testimony on Tuesday and Wednesday mornings, as that could have some indication on what the stance is on this market. And as we know, rule number one is always don't fight the Fed. So we just want to stay in tune, stay in touch with what old J Powell has to say. But this market is within spitting distance of all-time highs. This lots of the underlying names continue to act right, and good supportive action here as the indexes continue to climb here in this low volatility uptrend. Market remains healthy. Be on the lookout for any more news coming out of Iran, and be prepared for prices to balance out over in the cattle market, leading to a good buying opportunity to come as these markets all look very healthy and strong. Except for that corn market, we should see corn prices continue to get cheaper while the rest of these markets remain strong. So that's all we got. We'll see you tomorrow for closing comments.